So the stock market has recovered some of what was lost in all this tariff nonsense. At the lows, the S&P 500 was down almost 20%, but as of now, it's clawed back about half that. A lot of traders think, well, okay, I'm going to be the smart one, and I'm actually going to short volatility by buying the inverse volatility ETPs like SVIX. But buying the dip with volatility ETFs like the SVIX doesn't work simply because of how it's structured. Remember, it's not supply and demand that drives its price. It functions based on a methodology of rolling VIX futures. It's essentially the relationship between the front 2-month VIX futures and the spot VIX index price. When it's positive, SVIX has a tailwind and it will likely perform pretty well. This is what we see during stable markets, and this is why short volatility can actually significantly outperform the stock market during calm periods. But when that roll yield is negative, that's a headwind for SVIX, and it likely won't perform very well. So remember, with stocks, there is only one variable. It's supply and demand, and if people start buying stocks, then of course it's going to go up. With short volatility and buying the SVIX, there's two variables you have to be aware of. First, yes, there is a positive correlation with the stock market, and they typically do both go up at the same time. But there's that secondary factor of VIX futures roll yield that is just as big, if not bigger, than the directional price. So the S&P 500 bottomed on April 7th. Let's just say you timed it perfectly, and that's when you're going to buy the dip. Well, this is the VIX futures term structure on that same day, April 7th, 2025. The front 2-month VIX futures were 15% in backwardation, and with the VIX index trading at 47, there was a huge negative VX30 to VIX roll yield on that day. That's a massive headwind for the SVIX. This is what the SVIX chart looks like. Sure, it also started going up a little bit again on April 7th as well, but unfortunately the massive negative VX30 to VIX roll yield is going to make that recovery in the land of short volatility much slower. Buying the dip with short volatility is unfortunately just a rookie mistake.